Okay, good morning, folks, and welcome to Swing Trading Today. We're getting started at a wee bit later than we normally do for various reasons, which I won't bother you with. And I'm going to wait and go a little bit slow here while we wait for people to join in. And I'm just scrolling through some of the headlines. And what I want to talk about this morning is why we booked profits yesterday. Sorry about that. Why we booked profits yesterday and what is next in terms of our game plan. Are we out of the woods yet here? No, not by any stretch of the imagination. But the markets did become a bit oversold yesterday. And we were short of the trip cues. And if you bring up the chart of the trip cues yesterday, if you want to drill down and go and take a look at a 1 hour chart, we left the day yesterday. Stokes very oversold. Final hour of trade, we flashed Doji Star formation, sign of indecision, possible reversal of trend, at least for the time being. And at times when you're short, we were short using the SQQQ. At times when you're short, it's best to book those profits, make them real, and see what happens next. And that's exactly what we did. So here's the SQQ, same time frame, 1 hour chart. And we left the day yesterday. Not quite a Doji Star formation, but we did see some selling into strength. Some of that was us. So I always like to say this is my motto: first out, best out, especially when you're short. And we wake up this morning and we see the futures market. This is the NASDAQ. It's up over 1.33% this morning. So feeling good about the decision to cover that short. Now, this morning, we're looking pretty good here. Could we be bear flagging out? Sure. This is a 4 hour chart. Now, what's a bear flag for those that are not familiar? A bear flag is when you're in a downtrend. Sorry about that. I don't know why that keeps doing that. When you're in a downtrend and all of a sudden you bounce, in this case we bounced off of a support. And if I didn't say this already, this is a 4 hour chart of the NASDAQ. Actually, a 1 hour chart. My apologies. A 1 hour chart of the NASDAQ. Remember earlier we were looking at the hourly chart? Well, the same thing here, except this is the NASDAQ, not the trip cues. And we are drifting up higher here. So pretty good stuff. Now, what happens at times is that this drift up is simply a head fake. And we want to be very cognizant of that. I have zero plans to go buying the market at the open today. But what I'll be looking for here is a break below this lower band of support. As you see, we're flirting with that current right here. We're testing it. For all I know, though, we want to keep an open mind. We want to assume that it will rally back and head back up here to this upper band of resistance, and this rally will continue. Now, if we see continuation move lower, well, then we need to look to the short side yet again. and will possibly reopen that short position. Taking a look, excuse me, taking a look at the trip Qs again. And for those folks just joining in, we booked profits on the SQQQ yesterday. And we're looking to re-enter possibly today. And you can see here, we have broken support. And the question is, do we recover? Or, oops, wrong side. Do we lean into the short side? And we'll wait until the market is open before we make that determination. Okay. So we're good to go here. Name of the game is to sit, watch, and wait. What else do we have here? Let's check out the dollar. The dollar is fading on a daily basis. It was up yesterday. Here's a classic bear flag setup here. All right, it broke, and now we're just vacillating here. Now, why is the dollar important? The dollar is important because we are big time. Hey, Rich. Tommy. Okay, Rich, I'll check it out. You having problems logging in? What's happening, Richard? It just doesn't let you log in? Does it give you an error message? Cherry, hey, good morning. All right. So the dollar, lethargic. No sense spending too much time here. I'll definitely look into that for you, Rich. What I learned how to do yesterday, I'm very proud of myself, is last night I was toying around in the back end of the website. I was able to figure out a couple of things on the what they call the C panel. That's really behind the scenes stuff. I was quite proud of myself. All right, what do we have here? I want to take a look at gold. Gold is up at current. We had a rough early part of the week on gold, but I'll tell you, the price action was pretty good yesterday. Not wonderful, but it was pretty good in that we were able to recapture support levels. We're holding them today, 1,600. I was thinking with the price action on, I think it was Monday, that we may head all the way down to 1,500, and that wasn't the case. We're back up here again. So pretty solid price action. And when you think about it, when we were falling apart only a short couple of weeks ago, gold went with the market because you had a liquidity squeeze. Now here today, here's gold holding up pretty well despite yesterday's sell-off. So let's go to a 4-hour chart. I don't know why I'm on a 1-hour chart. Oh, here we go. This is better. So really nice consolidation here. The miners, we'll take a look at Nugget, see how that's performing. Going to embarrass me now here. Only when I'm live. Here we go. Okay, good. All right. We are about flat versus yesterday. I think that the miners are beginning to firm up here, and I'm not just talking about on a 4-hour chart. I think we're doing so on a daily basis as well. You can see the GDM. This is the gold mining index. It's holding its gains here. And if you take a look at let's take a look at GDM. Okay. All right, so what we did yesterday, I want to point out a few things here. Trump will be meeting with Russia and Saudi Arabia tomorrow regarding oil. So we should see a nice rally in oil. I'll go to the chart of oil on a weekly basis. We're ripe. We're ripe to have a run here. So here are the gold miners on a daily basis. Yesterday, really nice price action here. We did sell off the highs of the day, but a nice day. We didn't give up gains, which has been typical. We've been rallying, fading, rallying, fading. That didn't happen yesterday. Our stochastics, higher lows, RSI, higher lows. So we're looking pretty good here, especially when you had the markets. Think about this. The markets were, here are the trip Qs yesterday. Hammered. Comp. Hammered. Gold miners. We'll bring up the GDX. Nice. So we're seeing some relative performance that we were hoping for. And I went over a chart of the gold miners going back to 2008 and even prior to that back to 2000 when we were looking for a divergence. And I'm not saying we're setting up for that. Well, we could be. What we're looking for is a possible divergence between the S&P 500 and the gold miners and gold. My only concern is here, let's bring this up. My only concern is deflation, short-term deflation. Wrong chart. That's my major concern. Is it going to linger here due to the fact that we are basically doing nothing as a country? The flip side of that is that when inflation does come, it's going to come really quick, really fast, because remember, we have too few people producing nothing. And when people go back to work, there's going to be so much pent up. I hate the word demand because let's just use it. There's going to be so much pent up demand from people not doing anything. As Americans, we're going to go out and spend like crazy. And I think that we're going to see a rip higher in inflation. And then you'll get that divergence of gold and the gold miners ripping higher as the S&P 500 still goes into a correction or stays in a correction. So here's gold yesterday, up along with the miners. China we're looking to lean into. This is Yang. This is a leveraged ETF putting you short of China. We booked profits on this one a while ago. And we're looking to re-enter it yet again because they're shut down. And I think that I've said this before, and I'm going to keep repeating it because it's really worth paying attention to that the communist Chinese have put a proverbial gun to their own head because they have infected the world and they continue to lie about it. And I don't know who's going to be able to trust the communist Chinese in the future. So I'm going to be looking for continued weakness and strength at countries like Vietnam. You can see before we leave here, Yang, which is again the leveraged ETF putting you short of China, was strong yesterday. But we're going to be looking for strength in countries like Vietnam, which is still weak, still an opportunity. I like to see the single digits here yet again. And we'll also be looking for opportunities in Malaysia. Those are my two favorite areas at current. What else do we have here? Let's take a couple of chart requests. Anybody want to go over some charts? Anything interesting out there? Palladium. I know a gentleman friend of mine who just shorted palladium. Be careful here. We're consolidating nicely. In fact, we have an inverted head and shoulders setup. Left shoulder, head, right shoulder, 4-hour chart. Be careful with the short side here. Granted, we have not broken out above resistance yet. But what I would be looking for is a breakout here. Just be very, very careful. You got it, Rich. Let's check out silver. We're long of silver. And we're moving higher this morning, which is good. Drifting higher. What else do we have? Dollar. Let's check out bonds. The bond market is so critical. Let's go to the 10-year. And this is the bond price, folks, not the yield. And we continue to hold this support level. We may see a breakout here, and that'll force yields lower. So watch for a move higher here on the 10-year bond price. We are seeing a bit of a divergence here. We could attribute it to just the drifting of going sideways on RSI. Let's get rid of this. Seeing RSI put in lower highs. But again, we're simply vacillating in here. So I'm not going to put all that much weight. Were we moving higher like here, yet we saw this, that would be a negative divergence. I'm not going to put that label on this yet. Just something to keep an eye out for. I would get worried, were we drifting down below this lower band of support, but we're not. Rich, let's go take a look at, first we'll do a pre-market look. SPY. Let's just go to the S&P futures. And then we'll go to a daily view. All right, so we're up 1.7% this morning. The support level here at 2,444. Pretty good support for a bounce. Is this a bear flag? Maybe. We'll keep an open eye, open mind. I'm reluctant to reopen shorts until we see, and Rich, we went over this the other night on Market Wrap, and we'll go over it again today. I'm reluctant to reopen shorts prior to tomorrow because I want to short based on more of a macro rationale. And what I mean by that is I'm not a day trader. I don't want to be in and out of these positions day in and day out. I would rather short based upon a weekly observation. And tonight, I'm glad I just remembered this. Tonight we're going to do Thursday night stock charts live, 6 p.m. Eastern Standard Time. I'm going to go over the weekly charts and how they appear poised to close on the week. It's going to be live here on YouTube, so please join us tonight. If you want a half-hour, 15-minute alert, just enter your email address in the email. I'll provide it when I post this, the email address. It's Robert at just send me an email, Robert at thecontrariantrader.com if you want to get added to our opt-in email. Or go over to the website and enter your email address. We hate spam too, and you'll get that alert. So we're seeing a drift higher here, possible break below this hourly uptrend channel coming off the lows. So I'd be careful here. I wouldn't initiate a new position this morning out of concern that we may fade here, because at current we are down below this uptrend channel which formed yesterday, late yesterday, or started forming. Let's go to the Russell 2000, and then we'll go to the weekly chart and yeah, this is not good. This is still an hourly chart. So again, I wouldn't chase this market this morning. I think that honestly what we may be setting up for is an opportunity to reshort this market. Good. Okay, that's good. This I want green. All right, now we're good. So you can see we're beginning to pressure this lower band of support on an hourly basis. So will we fade? It's possible. Here's a 4-hour view. So we want to keep an open mind. Because we could be in the process of trying to build a base here. I'll pull back in a moment and I'll share with you what I'm looking at. So here's a nice base we've been building for the past week or so. Are we building the right side? Maybe. We want to keep an open mind, but we are beginning to put in lower highs and lower lows again. So that's why I'm still favoring the short side. Not to mention the fact that we and I mentioned this earlier, we're looking at this market from a very, very high level in terms of shorting. All right, so this is a daily chart. What I'm eyeballing is, sure, the daily chart matters, but what matters most to me is the weekly chart. I'm going to go to my saved version here, the one I put my crayon marks on. Here we go. Okay, this makes me feel better. Have to have my crayon marks. All right, so at current on a weekly basis, and the week isn't over yet, right? We need to keep an open mind. 1 day, 2 days can make a big difference. So we're not going to rest on our laurels here, saying, "Wow, look at this weekly chart. We're crashing. There's no doubt about it. We're going down to lower lows. In all probability, we are. It doesn't mean we're going to do it next week or the week after. It may take some time. So while I think that this is a very, very bearish weekly chart, the week is not over yet. I want to keep an open mind and see how we're poised to close. So we'll talk about it after the close tonight. I'll have a better feeling as to whether or not I want to reopen shorts. And by tonight, I may be short again, for all I know. But in all probability, we will be looking to lean to the short side based upon weekly charts. But the closer I get to Friday's close, the more comfortable I'll feel over the weekend being short this market. So what I want to do here is take my crayon out again and set myself reminders of as to why this market concerns me. And we'll definitely be looking for a break of this lower band of support. Volume thus far this week on a weekly basis is very, very high. Now, for all I know, it could turn positive by Friday's close. I don't know. We'll keep an open mind. Stokes rolling over. So at current, we're still quite bearish on the small caps. Daily view. Obviously a break of support yesterday. Going over to, Rich, you wanted the spiders, right? Let's bring up the spiders. You know, not much in terms of difference between the small caps and the spiders in terms of technicals. Here's your gap down lower, very similar chart pattern. Volume was above average yesterday. Now, again, I want to go to the weekly chart because that's going to divine what side of this market we're going to be on when I'm obsessing over the weekend about whether or not I made the right decision. So here's our line in the sand, right? Our lines in the sand. So what we're seeing on a weekly basis are reversal bars, right? Here's a bearish key reversal, but the week isn't over yet. Last week we were up, but we closed off the highs of the week. Where was resistance this week? Right where resistance was last week. So the market is sending us a signal. Don't get too comfortable to the long side here, despite what these thugs, these well-dressed, slick-back-haired thugs say when they go on the financial news. Be very, very careful. They have a book to manage. So here is resistance at around, what was the high of the week? We just called high of the week, 263. Rather primitive, but effective. So again, folks, as I'm leaving off here, what matters are not the hourly charts, not the daily charts. It's the weekly charts. How are we closing out this week? Because that's going to tell us how we're going to position ourselves as we proceed into next week. So, oil, okay. Oil's up 10% this morning. Let's take a look at that. I like oil on a weekly basis. I think with all the damage that's been done there, even with a 10% move, we could still head higher. Let's go with light sweet. Yeah. So this is a 4-hour chart. Now, thing to remember about whatever this meeting is, and I don't know much about it, but tax revenues over in Russia have been falling off of a cliff because they get a huge amount of their tax revenue from oil, and the price of oil is dropping off of a cliff. So President Trump does have some cards to play with. They're not very good over in Russia collecting income tax. So while Putin has no doubt played us like a fine fiddle these past few weeks, President Trump does have pardon the pun, a Trump card going into that meeting. So I'm not going to be the least bit surprised to see some sort of a deal come out in terms of production because it benefits all. And President Trump going into election season, you can't have the fracking industry, the shale industry here in the United States just simply collapse going into election season. So oil's looking good. I would expect good things out of this call. Let's go to a weekly view. USO. This is a chart I mentioned last night. We're pretty air quotes oversold. I mean, RSI is at 16.69. It's a commodity. It can go lower. But relative to your 2 and 3 standard deviation Bollinger Bands, we're pretty extended here to the downside. This type of trajectory is unsustainable. So I'm not saying that we've seen a bottom here in oil. What I'm saying is that we're ripe for a dead cat bounce. And that could be, easily a 30% move on the price of oil. So does it roll over and head lower? Could be. But for right now, we're poised for a rally on oil. Look at these Stokes. Very oversold. We're beginning to hook up. We're seeing higher lows in RSI and beginning to hook up. Yesterday, on a daily basis, we saw a nice bullish key reversal day. We closed at the highs of the day. That's a signal that there's a good chance that we should see a nice bounce today. And here's what I was warning about the other day. We had a rounding top down below 20. And sure enough, we got hammered. Broke down below this lower band of support out of this triangle formation. This is probably capitulation here, at least for the short term. So if you're looking at oil, I would do this. I would extrapolate down on my chart what was resistance. I wouldn't buy into this resistance level. I would buy on a breakout and add more on a retest, and then watch for a rally off of what was resistance should now act as support on a retest. So this is a chart, again, very extended on a weekly basis, daily chart showing signs of life with yesterday's bullish key reversal, and we were up on volume. No shock that we're seeing a rally this morning. And with that, folks, I'm going to say, please join me tonight, 6 p.m. Eastern Standard Time. We'll go live. We'll go over the weekly charts of all the major indexes. Are we setting up next week for a continuation move lower? Or are we setting up for a rally? So please hit that like button if you could. Join me tonight. Everybody have a profitable trading day, and I'll talk to you soon.